Your tax-free savings account can also become a tax nightmare. You see, we come to believe that our tax-free savings account is tax-free. However, if you use the wrong type of investments, the penalties can be severe, up to 50%, the total value of all your investments. And also, you can be taxed 100% of any profits or gains that you have made. So in reality, you lose every single profits that you make. Today's discussion, we're going to look at banned investments that should not be inside a TFSA and what you should look for in case you come across any of these investments that you decide to include inside your TFSA. But first, make sure to hit the like, subscribe, drop a comment down below in case you haven't met me before. My name is Leon Mann. I'm a licensed wealth consultant with Money Assist Financial. And what I do, I help hard-working folks add an additional multiple 6 to 7 figures to their retirement portfolio. And I also help them to protect the hard-earned money during retirement. Now, when it comes to banned investments, it is divided into 3 categories. The first one is what we call prohibited investments. Second, you have the non-qualified investments. And thirdly, you have the advantageous investments. I'll be discussing all 3 of these. The first thing are the prohibited investments. If you own a family business and you owned more than 10% of that business, do not invest any shares of that investment inside a TFSA. Otherwise, what happens? We tax 50% of the total overall investment that you have. In addition to that, any profits that you have made will be taxed 100%. In actuality, every single profits that you earn, the government will take away. So it is very severe and harsh when you use prohibited investments or investments that are very personal to you in which you own more than 10% of that company. Secondly, are the non-qualified investments. Investments that are qualified, by the way, include listed stocks, for example, and qualified funds. Investments that are not or should not be included are unlisted investments, or things like private deals, for example, things like land, things like some foreign investments. These investments are considered non-qualified, and the penalties are also harsh. You can be taxed up to 50%, the total overall value of all your investments, and any profits that you make from this will be taxed 100%. So you will not see any profits when you use non-qualified investments. The third is advantage investments. Investments that literally gives you an unfair advantage, sort of like cheating or bending the rules. For example, investments such as swapping deals, for example, or you over-contributed on purpose to your tax-free savings account in order to make more money. This is a no-no when it comes to your TFSA. They will realize this, and any profits that you make, basically 100% will be gone, right? This is how bad it is. Sort of like cheating. You do not want to use any of this. And another thing, the fourth thing, is trading inside your TFSA. Your TFSA is made for holding long term. If the CRA sees that you are trading or regularly buying low and selling high, for example, then you're treating it as a business. If you treat it as a business or a way to make money, then it is not allowed. You will be taxed on any gains that you make, just like regular income, right? So avoid things like trading, right? Where you frequently buy low and sell high, or you do a lot of trading and profit losses, things of that. Do not use trading inside a TFSA. It is simply for buying and holding long term. So what can you do to protect yourself? Well, for one, you want to use things like regulated funds and listed stocks, for example. These are included. For example, things like ETFs, GICs, segregated funds. These are all included and should be used in a TFSA. Next, you do not want to mix family with your investment. That is, if you own more than 10% of that business, do not use it in your TFSA. Do not use any shares of it inside your TFSA. Thirdly, do not use your TFSA as a trading account or a business. It is not made for business where you make money by buying and selling and all of that, or shorting stocks. It is simply to buy and hold. Your TFSA is one of the most powerful investment accounts that you have. However, there are certain lines that you cannot cross. If you cross it, the penalties can be very, very severe. As a matter of fact, if you have any other questions on how to go about maximizing the power of your TFSA, feel free to check out my website. It's leonman.ca, or leave a comment down below and I will definitely provide you with more insights on it. And also, feel free, if you found value, feel free to hit the like, subscribe, drop a comment down below, and check out these other YouTube videos where I totally take it up a notch. Until next time, I'm wishing you all the best. Happy Easter weekend, peace and love. Take care.